Hey everyone, I'm Anita Sharma. Welcome to Market Call tonight on BNN Bloomberg. He's back, Jaime Carrasco, our gold bull. He's also a portfolio manager at Canaccord Genuity. He's taking your calls, emails, and tweets on precious metals and North American dividend stocks. Here's how to get in touch with us, 1-855-326-6266. Our email address, marketcall@bnnbloomberg.ca. Our Twitter handle, @Market Call. Jaime, how's it going?
It's going great. Thanks for having me.
All right. It's always a pleasure to have you here, sir. You know, we like to talk about gold here on Market Call tonight. Gold spot price relatively steady. Last check, it's back below $1,500. Make the case.
I think that'll change next week when the Fed speaks, right?
All right.
I was here a year ago, and we were talking about gold sitting at 1,300.
Right.
But I think it's important to look at the bigger picture.
Okay.
The big picture is about the currency reserve. Mark Carney came out at Jackson Hole. He said that the currency reserve is in trouble. The Dutch central bank came out and said if the whole system implodes, gold will come back into the fore.
Yeah.
People are talking about the currency reserve.
Right.
The dollar has to be done. And I think that with Trump and what's going on with the Fed, he really wants to kill the dollar to have MAGA. So the dollar in its own, in the way that it's being set up for the global system, can't continue to work. And that's been my thesis all along, that if you look at all of these debts are written in dollars and they have to depreciate. Well, because we're living in a fiat currency system where it's not pegged to anything, we need a reference point. And I think that depreciation has already begun. Now, to me, it doesn't matter what comes out at the other end. What is the new currency reserve?
Right.
What's important is that the process of unwinding currency reserves throughout history has always been the same around gold.
Yeah.
Now, I sent you that chart because I think it's a very important reference point from a year ago today.
Let's bring it up. So basically, we're looking at the gold sector. We're looking at gold itself. We're looking at the Dow Jones Industrial Average. And let's put this in context. You started an initiative with respect to your clients, a wealth transfer initiative that really kicked into high gear when? October of last year?
No, about August. In October, started to show returns. But what happened is that once gold broke above 1,350 to 1,500, we really saw the benefit. Now, if you look at over the last 8 weeks, 5 weeks, we've been going sideways from 1,550 because we've had a massive move. There we are. So if you look at the yellow line, that is the producers. The producers will have the leverage, is what I had, was my speculation. Gold I see as money, which is the orange line. On the blue line, it's gold itself.
Yeah.
Now, the important thing is that you see the side trend that we've seen. That's the 1,500 mark. We've been going sideways.
Right.
But I think people will notice the next move up when it breaks above 1,550. Now,
that's the next target?
No, 1,550 is the high that we got at the last spike, which was sometimes around September. We've been going sideways.
Absolutely.
I think once the Fed,
a bit lower,
next week, I think they're really signaling they're going to ease again. So there's free money coming in. The repo market is signaling that. You know, again, I'm not a gold bull. I'm just have a good understanding of the fixed income market, and the tremors again are coming from the fixed income market. That's what's happening in the repo sector.
Speaking of tremors, we discussed this off air with our producer Aaron Sebeski. Let's dive deeper into this. San Francisco Fed economist coming out essentially saying, you know what, he looked at the results of several foreign central banks that actually went into a negative interest rate situation. He says it benefited their economies overall long term with respect to inflation, et cetera, et cetera. Does that not send a chill up your spine, though? Is he making the case for the U.S., what the central bank that the whole world looks at for pointers? Is he making the case for negative rates for the U.S. economy, for the U.S. Fed?
That's exactly what they're doing. But I think they're preparing us to really get into the money printing. To me, it's music to my ears because I'm already set up. I think in the next move, clients are already working from a much lower level when they get in, and those hedges are working. Now, what I've been saying all along as we go through this consolidation, make sure you start adding that 10% of your allocation within the precious metals, because what we're witnessing is money losing its value. And I think that will continue, especially if the Fed, one of the concerns that you have to see the game is different than in 08, because in 08, the Fed worked with the rest of the central banks. Now they're going on their own because Trump is pushing a completely opposite attitude towards the other central banks. Are they going to bail out Deutsche Bank this time around? I think not. I think we are at the end of the game. And the only way forward is to reduce the value of all of the debts which are written in U.S. dollars, in essence, a currency reserve. So it's a catch-22 all over again.
All right. Well, this is the end of this segment. Great start to the show. Jaime Carrasco, portfolio manager at Canaccord Genuity. We're on precious metals and North American dividend stocks. Get your calls in. We're taking them next. 1-855-326-6266. Welcome back to BNN Bloomberg. We're with Jaime Carrasco. Let's start with an email, Jaime. It's from Daryl. He wants to know about the bear market. He says he's nearing retirement, holding multiple dividend stocks, but with all the talk about a correction or bear market, I wonder where he's getting that from. Should he continue to hold them and collect their dividends, or bail to cash and buy after the correction? What do you think of that?
Well, I'm actually positioning clients to be a little bit on both sides of the equation. Last fall, I was raising cash. That cash is being spent on convertible bonds. Those convertible bonds are paying about 7.5 to 9.
Nice.
4-year maturity, so I pretty well have bought 4 years with 30% of my money. Now, most of the clients that require income are still generating cash flow from their dividends. Now, it's important to also note that Tony Dwyer, our chief equity strategist, he thinks the market has more room to go up. I would agree with that, because you have to understand that what we're watching is all the flow of funds coming out of the fixed income market. That's going to enter the equity market, but I'm going to say this with a note, with a caution. The best performing market over the last 2 years was Venezuela. Now, that says a lot, because money was coming into the equity market. So it is a bit, that's also going to be very bullish for the precious metals as hedge. And that's why I have that 10% at least, I have clients at a minimum of 20%. Within the dividend component, I'm making sure that the companies are either pipelines, utilities, the big solid ones, that no matter what happens, they're going to generate cash flow. And make sure as well that as much of them have cash flow coming from outside of Canada, like the Brookfields or REITs, Dream Global, which just got taken out, but that's why I like that one, right? So I am positioning myself to continue to generate cash flow, but have assets on the side and hedges so that I can benefit from any downside. And I think that's a much better strategy, because the market could go to 40, 50,000 as this money start to come in and fear really kicks in. But one note of caution, that if you look at currency reserve shifts or debt problems, they have always, the corrections have always finished when gold and the Dow are exactly the same value. In 1980s, 800, in the 30s, 35. So if the market goes to 30, maybe gold goes to 30. We don't know. I don't know how high will it go. I've always worked within gold in the mantra that the longer it takes, the bigger the fiscal mess. So the higher it has to go to hedge against liabilities. Gold is the only asset that's nobody liability.
Can you give a projection? I was trying to get at it earlier in the first segment, but can you give a projection as to where you see bullion hitting by, say, year end? Is that unfair? Or?
I think that's unfair to say. I think that if we break above the 1,500 range, where it's 1,550, we are already back in business with the move we've had. This is just the first correction. Now, nobody thought that it was going to be at 1,500. I was a little bit more bullish.
You actually called it, though. If I remember correctly, you were on the program. We were in the high 14s.
That's right.
After October, and you said it's got some room to go up, but when it pulls back, that's when you're going to see a crowd once again fall into gold.
That's exactly it. Now, how high will it go until year end also has to be measured against all the shorts that are in place. Once we get this break above 1,550, those shorts will have to cover. So we're going to have even more pressure coming higher. We're also going to have other money coming into new money coming into the play. So I think everything will start to move. What I find very bullish is the fact that the producers are holding on. If you look at that chart, they haven't pulled back. They're holding that pattern, and I think they're the ones that are going to lead, which I think people will notice.
Oh, yeah, and one of those producers has just, you struck gold with them. We'll get to your past picks in about 5 minutes. You'll be happy about that. Meantime, let's get to our first call. He's waiting patiently. John in Montreal. Hey, John.
Good evening to both of you.
Good evening.
My question's on Nickel Creek Platinum. The LME boys over the pond like going forward that nickel and gold should do very well. Now, I know it's only 8 cents on the big board, but they've been there for quite a while, So it tells me they probably have deep pockets, both financially for the Toronto Stock Exchange as well as furthering their projects. They have great property, apparently, huge holdings. And do you like this stock going forward? Would you own it? And Anita, may I please have consensus if I have it? Thank you very much to both of you.
All right. Thank you, John.
Okay. First of all, John, I do not own this company.
Okay.
I took it more because platinum palladium are more of interest to me, and I've been looking for platinum palladium plays, so it caught my ear. However, what I would say is this: if you're sitting in this company, the first thing I would have to say, considering the age of John, I would make sure that you have some of the more blue chip companies that have a dividend first, right? Instead of just playing the juniors just yet. If you're going to be, if this is your only play, you have, I think
you
you're
want to
taking
diversify a little bit?
Okay. You don't want to be that risky.
Okay.
Now, what I would be looking at when analyzing this company, I would be checking out how much money they have in treasury. So are they going to have to raise more money? And I think that's key, because right now we have a situation where a lot of companies are seeking money, but they need to come up with money to fund the projects, right? Nickel is strong, is one of the base metals that I particularly like, but platinum is for more interest. So I think with this one, I would definitely take a look and see where they're at, but I don't have a position, but I would definitely be interested in taking a better look at.
All right, Jaime, thank you. And John, unfortunately, we don't have consensus to provide you with respect to Nickel Creek Platinum, but thank you for calling in. Let's get to Marge from Sarnia, Ontario. Hi, Marge.
Hi there, Anita.
Hey.
You're doing a terrific job. I
Thank you,
really
ma'am.
enjoy every evening.
Thank you. Thanks for
Mr.
calling in.
Carrasco, I wondered if I could get your opinion on Alamos Gold. It's pulled back considerably with the rest of the metals here.
That's right.
Is this a good entry point? And what's your opinion on the company going forward? Thank you very much.
Great questions, Marge.
Well, it's not one of the ones that I have in the portfolio. It's I've looked at it a couple of times. They've all pulled back over the last bit, so I wouldn't be too concerned about the pullback. What I would be looking at more from a fundamental basis is the how low was it in August, and where did it get? What was the high, and how much of a pullback it's had? They've all had it, right? Because of a lot of people don't know how far we're going to go, so we got to wait for gold to go. As for this company. We have it as, sorry, I was just bringing up the because it's one that we follow, so bear with
While
me.
you do that, I'm going to offer some price target cuts, unfortunately, Marge. It looks like National Bank sliced it from $11 to $10.50, but they are maintaining the rating at sector perform. So there is that to contend with as for now from National Bank's perspective. What are your thoughts?
Yeah, and we have it as a buy with an 1150 target.
Okay.
But there are some issues with one of their projects, and one of the risks that I would not own Alamos Gold because I have properties in Turkey.
Okay.
To me, geopolitical risk is the number one issue that I'm looking at, and that's why, just off the bat, geopolitically, it's not one that I would hold. But we do have it as a buy with an 1150 target.
She already has a position. What should she do? Bail and jump on another gold bandwagon?
That's what I would advise.
Okay, there you go.
Agnico.
Yeah.
There's a lot of good companies. They're all cheap. This ride hasn't begun yet.
Yeah.
It's just getting going. So what I would suggest, if you're going to look at another company, high reserves on the ground, low cost of production, good management, and in solid geopolitical areas. Those are the four main criteria that I look at, and it's helped in picking quite a lot of good companies.
Okay, and we'll talk about Agnico a bit later in the program. So, Marge, stay tuned for that. We'll come back with Jaime Carrasco, portfolio manager at Canaccord Genuity. We're on precious metals. We're on North American dividend stocks. We'll see you in 2 minutes. Welcome back. We're with Jaime Carrasco. Let's tie a bow on Alamos Gold for Marge.
Yes, I was going to say that with Alamos
You were right.
Gold. What had happened was that there were some delays in the permitting out of Turkey. So it is the geopolitics. Again, with Turkey, what are the mining laws? What are the rules?
Yeah.
I know that in Chile and Peru, I might have the students riding because that's normal, but at least the mining laws are solid.
Okay, so definitely the huge barrier to entry is the geopolitical risk underway in Turkey right now. Marge, he's basically telling you to bail and move on, so hopefully that helps. Let's get to Tony in Calgary, Alberta. Hey, Tony.
Hi, thanks for taking my call.
You bet.
Jaime, I want to ask you about North American Palladium. I was in it early, so I'm pretty happy, but also pretty disgusted with what's going on here with them in Brookfield. What do you think of the deal? Thanks.
I'm kind of on your boat. I love this company. It's in the portfolio. I have to say that over the last year, if you look at into the spike of that, I was continually selling and was able to average down as platinum prices were spiking. Now platinum's going through the roof and might be out of this play so I am looking for a new platinum and palladium. I'll take the money. You can't argue these things. These guys are being smart. I wish a lot of people had also been smart to buy it cheap. And I think it's also significant that this ride has a long time to go, and some players are coming in and they're acquiring these companies now. Right, so it's very bullish. Now it's disappointing because I don't have it anymore, but now I have cash to go buy something else.
There you go. All right, Jaime, thank you. Let's get over to Olds, Alberta, where Bill is standing by. Hi, Bill.
Hello. Good evening.
Good evening.
I wonder what your guest thinks about the stock CEF. It used to be the Central Fund of Canada, and it now is run by Sprott. I'll hang up and listen to your answer. Thank you.
All right. Thanks, Bill.
This is my go-to ETF because they have actual gold. It's funny. The GLD just added over 2,000 tons of gold. There isn't 2,000 tons of gold. They've added paper, right? So with a lot of ETFs are either doing it through futures or paper contracts.
Yeah. That worries you?
Very much, because you're not buying gold, right? You're assuming counterparty risk. So my question would be the same guys that are sitting, so look at GLD, it's JP Morgan, but they're also the custodian for the GLD, but they're also the firm with one of the biggest derivative positions. The derivative market blows up. It's way bigger than their GLD. Well, I think there's counterparty risk that I myself would rather not take. When you're buying gold, you're buying an asset that is nobody's liability.
Right.
But you either have to have it physically stored, segregated, which Sprott does, and it's the reason why I like the companies. There's no better vault than the ground that they're in, right? So if you look at Agnico, I think at some point those 20 million ounces that are on the ground are going to have a lot of value like they did in 2011. So I use the Sprott, I use the BGM group as well, Nick Barishev's outfit, which is silver, gold, and palladium. And what I like about this one is that it's silver and gold. It's segregated, and you can go and get it if you want, which gives you the safety that I want to see within this investment.
Look at that 1 year up 22%. It almost trades like an equity. It's you would expect a return like that from an equity.
Well, I think that the next move is the one that everybody's going to note, because what they're seeing there is just gold going from $1,350 to $1,550.
Okay.
Right. Once you were asking me about where would gold be at year end. Well, if you follow this, it's going to be much greater than the force of the first move, which was $200. So we could add another $400.
Wow.
Get up to the 1900 range.
And it's going to happen quickly, right? Like we were talking about
It'll
gold.
accelerate.
We were talking about gold in the 1300s for such a long time. And when it started ripping, and it did do just that, when it got to 1550, it caught a lot of people by surprise.
Well, Anita, I would have to bring up Terry Duffy, the chairman of the COMEX, who 3 years ago said that gold, if you look at what's going on around the world, systemic risk, should be trading about $5,000 to $6,000, and it isn't. And people are dismissing that fact, and one day they will not be able to dismiss it because the price is going to jump. I think that what we're witnessing now is the loss of control of how the price was maintained low through the futures market. Gold's in backwardation. The borrowing of gold is done. So I think all they can do from here forward is just control the rise on the price. And that's where I think we're coming to a bit of a blockage, and we're going to see the next move up.
Okay, let's continue the conversation on gold, but let's bring in Peter from Vancouver. Peter, it's been a while.
Hey, Anita, I watch you every day.
Thank you,
every
sir.
day you got different fashion. You are as great as ever.
Thank you.
James, can I ask you about Kirtland Gold, please? Thank you very much.
Thanks, Peter.
This company has been stellar. They've fully they've been the best one over the last 4 or 5 years. I've had it. I think I'm in at about $5, and it's sitting at. It's been as high as I believe $60 or maybe $70. It's a great company, but I think it has the same specific as a lot of other good companies. What I like about this one, it allowed me to continually Again, asset allocation within the portfolio. This one's in the equity income portfolio, so it's the one for the more conservative where there's only 4 positions.
Okay.
This is one of them. And what's the benefit of it outperforming is the fact that I've been able to cut back on it and buy the other ones.
Okay.
Right? So I've used it as a bank.
You keep a certain weighting in this? Is that
that's
it?
exactly it.
All right,
Right?
so
I
you chop it off at a certain point.
Yeah, I have 3
You're playing
rankings.
with house money, essentially, when you do that.
Pretty much,
Yeah.
right? So I have 3 rankings. One is neutral, so I have about a 5%, overweight 7%, and if I think it's time to unweigh, 3%. Something that I like high, for example, which is blockchain, I have it at 3%, and I'm just waiting. Someday I'll add back, but for now I'm waiting. So what I've been doing with this one is I had it at 7% all along, and I was cutting back and adding the ones that were at 5%. So that way I was able to average down on every position, thanks to this one, North American Palladium, and there was one more that got taken out that I can't remember now.
Okay, well, we can remember when you were pumping Agnico Gold, you said go out and get this, and when you find out after this break what this return is, folks, you're probably going to kick yourself if you didn't buy this one. Past pick straight ahead. Welcome back. It's time now for Past Picks, courtesy of Jaime Carrasco. I'm going to let you bask in this one. Agnico Eagle, my goodness, up 54%. That's how much our viewers would have made had they purchased this on October 31st of last year, when it was your top pick, sir.
It's still one of my top picks. It's still a cornerstone of the portfolio.
Okay.
What I like about this company's management, they've just delivered in an unbelievable way. They're going to be fully self-sustaining within the next couple of years. They won't need any money. They have a lot of projects throughout the world, all at cheap cost, $600 Canadian, $640 to be, the exact number. I'm not an analyst. I just like how they've executed, and what's really neat about this company is we're starting to see the dividend rise, right? And I think eventually that will continue coming, especially as the profitability grows because of the formula that they have for the dividend. Sean Boyd has just done an unbelievable job on this company. I continue to believe in it, and it's early. Anybody that thinks that this is late, reserves on the ground aren't even priced yet. Most of these companies are trading as though gold's sitting around $950 to $1,000.
Wow.
There's a lot of room. That's what I mean. Once we get this next break, if the producers lead, as I think they will,
They're going to rip.
People will notice. And that early move is nothing. The only people that have participated in this is 1% of 1% who own the precious metals. This is an unloved trade. So there's a lot of money to come here.
Unloved for now, but I have to say, if you weren't a gold bug, the better part of this year, folks, did convert. They started.
They're noticing.
They're noticing.
I'm getting
They're
calls,
noticing,
but they're not yet.
Yeah.
That's coming.
Yeah, that's coming. All right, we're looking for a big push in energy, and so far for you, AltaGas has been a big winner. Up 24% from last year.
Well, what I bought it,
Brilliant.
when it comes to these guys, the earlier question in terms of dividend raising, I bought it for the dividend. At the time, it had
that comprises 17% of your return.
Right. It had a big pullback, and I thought it was a really good entry point. I had already done when I'm building a position, I'll take a small half of what I want, and then I wait. That's exactly what happened with this one, and we've benefited. Now I'm holding on because I like the dividend, right? So within the portfolio, it's still there, but it's that equity chunk is much lower than it was a year ago, right? So I will hold on to it. I think that at some point energy will come alive, and a company like AltaGas is more storage, and the winter's coming. And I think it's going to be a hard one.
Yeah, that's good to hear, because for a lot of our friends out west who are just still struggling with the current situation, you're saying that there is some light at the end of the tunnel.
Well, I'm not 100%.
Okay.
I'm not there with the oil producers yet, but this is more of I see it more as an electric generation, storage, pipeline. So it's more of a diversified company.
Okay.
Now, yes, it is tied to the Alberta economy, but again, it goes back to my thesis that when everything goes down, at least there's always a minimum bare economic activity that's occurring, and these guys are in that, right? And that's why they've survived, and I think they're going to be there. Same thing with Enbridge, the pipelines. No matter what happens to the economy in North America, we're going to have a minimum level of economic activity that is required to be filled by some of these companies that are monopolies.
Okay. Cash. This is your third, this was your past pick.
A year ago.
Okay, a year ago. What was your reserve then versus now?
Well, right now I'm only 1% cash. At that point, it's 30%.
Wow.
Right? But it was spent into the decline that we had.
Yeah.
So the thesis on the cash was the fact that as the Fed was rising interest rates, we were going to have to reverse course. because it was going to start putting pressure on the interest rate mechanism and the market.
Right.
What happened coming into January? We had a massive pullback.
You did?
They've had to reverse.
Did you go on a buying spree?
I did go, but it was all convertible bonds. I was
Okay.
locking in yields.
Yeah.
Right. So I didn't go into the equity side. I went into the fixed income side, and I'm sitting there. So going forward, though, now they've fully reversed. They've already started to print because of what's happening in the repo market. So quantitative easing has begun, whatever they want to call it. It's money printing. That has already begun, and that's really going to push the markets as well. But do understand that I think it's the last kick at the can of money printing because of what's happening on the fixed income side, not on the equity side.
You're saying folks started noticing gold this year. Well, bonds, I can't believe how many calls we got on bonds when the yield curve started inverting earlier this year. It's a bit out of the headlines as far as now is concerned, but it's top of mind or back in the mind still in terms of how it did spook our investors coming well ahead of Halloween. How do you feel being in the bond market? Are you comfortable there? Are
Not
you
at all.
building on your bonds? Okay.
Not at all. That's why I like gold.
All right.
The problem, okay, one of the things that I was a repo trader, so I understand how the repo market works. And I have to tell you that the signals I was looking for in 2008 are bigger today in terms of warnings. So if you look at the percentage increase of the repo market in middle of 08 when things started going haywire, well, the rates were jumping, but they were jumping much less than they are jumping now. So now I would be concerned with the rate, and it kind of really reflects what's happening. First time that the Fed opened the window, it was 3 times oversubscribed.
Yeah.
The repos are rolling over now because they're only 14. Repo is trust between you and I. You being JP Morgan, me being Goldman. If you're seeing that jump in rates, it means that big boys are losing trust among themselves.
Wow.
That's a problem, right?
Yeah.
And so the fact that the Fed has had to go 5 times oversubscribed now that the repos are rolling is also a big concern. It's a liquidity problem.
Okay. Jaime, thank you for that. And once again, sir, well done on your past picks. We'll come back with Jaime Carrasco and back to your phone calls next. Welcome back. We're with Jaime Carrasco. Let's get back to the phone. So far, so good, Jaime. We'll bring in Ernie from Victoria, BC. Hi, Ernie.
Oh, good afternoon. Yeah, my question is on silver in general.
Right.
And I would like to know if he has a good ETF in silver.
I think he does, Ernie. Let's find out.
Well, the SLV is the index, and I believe they've structured an ETF off of it. The problem is that silver is one of those rare ones, right? So on the ETF, I do the Sprott if you want the physical silver.
Okay.
If not, I would go with more of the companies,
Okay.
right? Something that will give you participation in the companies. And there, I think USA, the silver on its own, it's a hard one to come by.
Okay.
If you really want, this is one of the ones why I like the BGM group. It's a third silver, a third gold, and a third platinum, and they keep rotating.
Okay.
Right, so you're getting all 3. So if you had to have one choice, that's the best one, right?
Bit of a basket there.
A bit of a basket. And
Yeah.
the good thing is that since they're rebalancing, they're buying more silver now that it's cheap. Because eventually I do like silver more than gold. The gold-silver ratio has to correct. It's sitting, I think, at around 80 times. So it means that historically, that sits at about 16 to 20. So
Oh,
if
really?
it could get to 40, maybe 50, it's actually a huge move from the current 80. So I
Why
think
hasn't it
there's
bumped
much
up?
room. That's a good question. I think I would ask the guys that control the future market more than anything.
Yeah.
Silver, 80% of silver comes from copper mines. Silver is a very rare metal in terms of pure silver producers. So, if you look at what's happening with the slowdown in copper, there's less silver. So by default, it should have had a bigger leverage move up, and it
Right.
hasn't. So that disconnect at some point is going to have to, at the SLV, at some
Yeah,
point.
yeah.
But again, counterparty risk, right? Especially on the silver side. So if you want to play the silver price, that's a good place to play it. But just be ready to pull your money out if you hear any problems with the with the credit derivative swaps and the whole futures.
Right, and the 1 year there too. Nothing to sniff at there.
No, because it hasn't.
Closing in on 20%.
It hasn't gone yet.
Yeah.
Right. That's why I do like silver. And if you look at the asset allocation, the rotation as I'm selling,
Yeah.
I've been buying quite a bit of the silver companies because they haven't had the move yet.
All right, so you're trying to get ahead of that, yeah?
Now on the silver, it's 40% silver, 50% gold.
Okay.
So I like
So
to
they're
keep
getting a
about
bit
that.
of, okay.
A bit of that balance as well. So it's not just silver. I like to have a basket of it all.
All right, I think we're going back to gold. Let's bring in Christina in Windsor, Ontario. Hi, Christina.
Hi.
Hi.
Could I have your thoughts on B2 Gold? I do own it.
All right.
Would you have a 12-month target price, or is it good longer-term hold? Thank you.
All right, thanks, Christina.
I think it's a good longer-term hold.
Okay.
It's one that I've looked at. I've looked at in the past. They have properties in Nicaragua and quite a bit in Latin America. We have it as a buy with a $7 target. Just give me 1 second because I thought I read some good news about that had just come up. And they have properties in Mali and in Africa, which again, that's the reason. One of the reasons why I've looked at it, but I'm not in it because the geopolitics in Africa and Mali, I don't know. I don't understand them. So it's not one that by default, just being in Latin America is not enough. It has to be in fully in countries that I understand, and because of that, I don't own it. We have it as a buy with a 650 target. They like the drill results, everything, the work that they're doing. So the project is moving along well, and it's pulled back like all of them. So if you own it, you like it, maybe pick up a little bit more, average down. But it's one that I myself do not own. And it's not one that I would own because of the geopolitics.
Okay, so your Canaccord, I guess, is a bit more bullish than the general consensus, Christina. We're coming in at $6.20 for a 12-month price target. But to your point, you have it as a buy, and across the board, 16 buys and 1 hold on this company.
Well, with all of the companies, one of the things you have to understand is, first of all, reserves on the ground are getting paid at all. They all have good leverage to the price, so in terms of earnings. So they will move. I just want to make sure that I'm in the ones that I'm comfortable with, that I don't have to come back and worry about it. And just build solid positions within those. Agnico, Franco-Nevada, the big solid ones that I fully understand that I've always had.
Okay.
What I'm doing now actually is adding exploration plays. So I'm starting to step out and I want to have 5 exploration plays. If one of those pays, it pays for everything, right? If one of those hits, and there's a lot of good projects that are okay.
And let's back this up, right? It's a bit of a strategy on your part. First, you pull out some cash off some stocks that have been rewarding you quite well. So essentially, you're playing with a bit of house money. You're willing to explore with some of these exploratory companies, right?
That's exactly it. I'm taking profits
and you're rolling the dice a little bit here.
And I'm be able to allocate. So again, I want to have about a 7% position. In and if I can choose 5 companies, that's what I'm aiming for, and no more than 10% of my speculative play within the precious metals portfolio, what I call the special opportunities. In the income accounts, I'm not doing that. I'm holding on to good, solid blue chips.
Yeah, that's wealth preservation.
More royalties. I want the cash flow. I want the ability to build income and, not allow my clients to finally sleep after 3 years of waiting for this to start.
All right. Well, let's continue the gold conversation. Boy, is this a hot topic. I'm not surprised in this hour. Let's bring in Colin from Edmonton, Alberta. Hey, Colin.
Hi, how are you guys doing today?
Doing well, sir. How are you?
Good. Okay, I just got a question on Kinross.
Sure.
I think they're the 4th or 5th largest producer.
Okay.
I was just wondering what are his thoughts on Kinross? He's kind of answered the geopolitical. I know they have a big mine in Africa, Tasiast, and I think that's their little crown jewel. So I was just wondering what his thoughts are on Kinross. Thank you.
That's a good question, Colin. My problem with the Kinrosses, the Barricks, and the big boys is that I want to capture what I captured when I bought Microsoft in 1995, right? Go back to that point. The problem is if you look at IBM, through that period, they made a lot of money and they've moved. But it was a moderate move, right? I'd rather have the leverage of a Microsoft, so i.e. Agnico, the mid-tier ones that have low cost of production. These guys are just finally getting in the money, right, in terms of their cost of production because they have so many projects. So I'd rather avoid these guys, and I've been going more with for my mainstay or the Agnico equivalent is, the Microsoft type. USA, the juniors or the mid players that I'm buying, I think I'm going to get the same thing at Netscape, the massive earnings increase, leverage, and those guys have a lot of exploration still to do, so that I could also get some exploration surprise on against those guys. So I want the leverage. I want to be able to ride this wave that's starting as best as possible, right? And I find that with the Kinross, again, for my most conservative clients, Franco-Nevada and Agnico, I think offers a pretty good balance of good quality and leverage, and I want the leverage.
In keeping with your thesis, with your theme, some unfortunate news here, maybe, Colin. Looks like if we offer the Bloomberg intelligence here, they've crunched the numbers on this, and they're saying that the downside will prevail with respect to this stock value as long as $4.89 is the resistance number, currently trading at $4.61. So not a good look on that front. However, on the other side, for whatever it's worth, National Bank is maintaining it as an outperform and did raise the price target by a quarter to $9.50.
Right.
Word?
Yeah, and one other thing to point out as well, with something like Kinross, right? They went out and paid a lot of money for that project in Ecuador that now Lundin Gold is running. I'd rather know it through Lundin. I'm going to get the leverage. And these guys paid a lot of money, and then they sold it for very cheap to Lundin, right? So I look at what they do and when they're getting rid of assets, and then look at the guys that are buying their assets as a better place. Same thing with Barrick. I just participated in something that they used to own, and I think it's a much better play than Barrick itself.
Okay. Jaime, thank you so much for that. We're out of time for this segment. We'll see you on the other side of this commercial break. Welcome back, Jaime. We're back on the air. Let's get back to the phones. We'll bring in Ross from Minden, Ontario. Hey, Ross.
Hi, Nita. How are you?
I'm doing well, sir. How are you?
Very well. Your show's excellent, and you're a wonderful host.
Thank you, sir. Appreciate it. You're a great viewer.
Okay, we're just making dinner here, but I'll get this question off quickly.
Okay.
I'm just wondering about CIBC Precious Metal Fund. It's my biggest holding in the area. I just wanted to kind of play it safe, and I'd just like your guest thoughts on it, if you would, please.
You bet.
Actually, according to their top 10 picks, I wouldn't have a problem whatsoever with this company, Franco-Nevada, Agnico, Kirkland, most of the ones, Detour, even B2 Gold for the person that called earlier.
Right.
Well diversified. So it looks solid to me. And what's the management fee? 2.4. That's reasonable.
Okay.
Right? More than I charge, but it's good.
Big thumbs up from Jaime. Let's bring in John from Halifax. Hey, John.
Thanks, Anita.
You bet.
Ivanhoe Mines, please. Thank you.
All right. Thank you, John.
Ivanhoe. Give me 1 second. I'm just bringing it up. It's one that we follow. We have it as a speculative buy with a 650 target.
Okay. It's at 338 right now.
But the only problem, again, is South Africa and the Dominican Republic. Geopolitics, not for me.
Not for you. Okay.
Wanted it quick.
There you go. Short and sweet. Let's take a break. We'll come back with Jaime Carrasco and 2 more phone calls. Stay tuned. Welcome back. Back to the phones. Michael in Burnaby, BC. Good evening or good afternoon.
Good afternoon. Yes, back in early August, Ross Healy recommended Fortuna Silver.
Right.
What's your opinion on that, Jaime? And do you think there's much upside to it? Thank you very much.
Thank you.
I think there's much upside in all the silver producers.
Right.
Fortuna has been part of my portfolio for the last 3 years. It's one that I think it's steady. Good management. Mexico is a place to be for silver production. I have 3 companies in Mexico. Low cost of production. It's a great company, well managed, and I think there's a lot to be delivered out of these companies as the price starts to move.
Okay, and you are expecting a big move with respect to silver. Let's round this out with Stephen in Vancouver. Hey, Stephen.
Hello, Anita. Thank you for taking my question again. Mr. Carrasco, hello, sir. Nice to see you again. I've been waiting for you for a very long time. My question is on Enbridge. Is this dividend safe? Because I bought some it's a matter of strategy. I bought some way back at $50. Should I load up a little bit more at this current price of 47 plus so that I can lower my cost basis? And I would like to seek your expert opinion, please. And I really appreciate it. Thank you so much, sir.
Enbridge is one of the mainstay of my equity income portfolio. It's a great company.
You like the dividend?
A big monopoly. I like the dividend. I don't think the dividend is any issue. I think with this one is one of those, though, that I've cut back on my position. If I wanted to sit at a 5% holding and it's sitting at 4 now, I would definitely add more. If you want solid dividend, I think, what's the dividend on this now? Is it sitting around 6%?
It's close to, yeah.
Yeah, so at 6%, it's not bad. All I remember about Enbridge that was a great reference point back in 2008 when
I shut my computer
when everybody
you threw
was
me for a curveball there.
when everybody was selling it, the yield got up to about 9.5%, 10%, and it was a great entry point. And I think that's what I'm waiting for. It's definitely one that, if anything bad happens, I will be adding back just for the cash flow.
All right.
So I'm very comfortable throughout all the time. I'm very comfortable with
Aaron
Enbridge.
Sebaski chiming in, dividend 6.2%.
That's what I thought, around 6%.
Yeah, what do you think of that?
Yeah. Reasonable,
yeah.
with all the other pipelines and utilities.
Okay.
Right. So if all of a sudden it gets 10%, like AltaGas did a year ago, we're sitting in like about 12%, I would pick up a little bit more. But for now, solid hold. And if you want to add cash flow and you have cash, not a bad choice.
Okay. I think we've got about 30 seconds to play with. Give us a quick analysis on Brookfield Infrastructure Partners. This is courtesy of Rick.
Great company, right? What I like about anything from the Brookfield family, this is global cash flow. I learned at Macquarie how well infrastructure plays are done, and these guys are some of the best in the world. So again, one of those that will generate cash flow from outside of Canada, so it's a great place to be for cash flow generation. Yeah. Good management, and the dividends have always been steady. So, yeah, I don't have a problem with any other Brookfield. Apart from selling the North American Palladium on me, that's another story.
Yeah, which you addressed earlier. Our viewer also very displeased with that. All right, Jaime, great show. It's not over yet. We're going to find out. You already know one of his top picks, but we'll find out more straight ahead. Stay tuned. Welcome back. We're with Jaime Carrasco. Top picks time. You teased two of your top picks inadvertently. Let's start with Franco-Nevada.
Solid. This is what I buy from my parents for cash flow. It's a royalty. The dividend, as commodity prices increase, I expect the dividend will continue to increase as part of the formula. So it's a solid one that I would definitely recommend to anybody.
Okay. Parents, perhaps a bit younger, maybe you would want to dip into America's Gold and Silver. USA is the ticker.
This is one of my favorite companies. What I like about this is management has executed in an unbelievable way. All other companies have been producing their highest grade to stay alive. These guys haven't. They've been producing their lowest grade. They can increase production by almost 300% just by switching the machines from 5 grams per ton to 30 to 50, which are waiting for $22 silver to do. And we're going to be producing gold. We're going to pour gold this year, and we're going to be producing by early next year with the new Pershing of the purchase of Pershing. Biggest shareholders are Pierre Lassonde, Eric Sprott, Sandstorm. So big institutional following. I've been in it for about 4 or 5 years now since its inception, because this is Barrick's M&A team that went and started this between them, and they've done an unbelievable job.
Okay, let's round this out with Dynamic iShares Active U.S. Dividend ETF. Would this qualify as a dividend aristocrat?
No, what I'm playing here is the U.S. market.
Okay.
I do agree with Tony Dwyer, our equity strategist, that we might see a blow-off top coming off here.
Right.
And what I think is that if this plays out, it'll be like the top into any massive bubble where, the tulip phase where things go crazy because all the money's coming out of fixed income.
Right.
What I would say is play this for the upside on the U.S. market, but be aware that constantly put a stop loss, because when things are over, this one's over, right? So just let it ride until the end and make sure you move that stop loss so that you lock in your profits when the time is right.
You got to keep a close eye on this.
That's
one,
what I'm going to be doing with my position, is definitely put a stop loss on the way up and let's see what happens. But I think they're going to have to print a lot of money to keep the system going. There's liquidity issues, and I think next week will be very telling when the Fed comes out, and we're starting to hear a lot of warnings of things.
What do you think the Fed's going to do? It's almost like deja vu from their last announcement. There's a big group of people who say they don't want to see a rate cut, but they see it coming down the pipe. What do you think?
Well, I think that the politics have taken over. I think Trump has control of the Fed. I think that's why they cut. So I do think that there's going to be more and more politics, and as politics enter, again, it's the populist wave. It's the 30s playing all over again. It's uncertainty, and what better asset protects you from uncertainty than gold? So no matter what, I think it's going to be a lot of noise. I think at the end of the day, they have to do whatever it takes to keep the system going until the next election. Trump is going to ask for that, and that requires a lot of money printing, and it's starting.
You know, I hear, because I invest in real estate, I often hear, real estate's the perfect hedge. But more and more, I'm starting to hear gold might be.
Well, I think the problem with real estate is the currency, right? The 30s was about paying off all the debts that were written in pounds by bringing up the value of the dollar. They created a brand new dollar. This time it's the dollar that's in trouble, so they're going to have to devalue all the currencies, and we're starting to see that. So the real estate in the value under which you've written it will come down. That's inflation or hyperinflation. The only asset that's going to hedge you is gold. So I think a balance of both is the way to go.
All right.
And the strategy has begun to work. And I think in the next move above 1550, I think people will take note of what's going to happen.
All right. Well, we're taking note of your presence. I know our viewers are quite enamored to have you on today. Jaime, always a pleasure.
It's always a pleasure. Thank you for having me back.
All right. You bet. That's Jaime Carrasco. I'm Anita Sharma on behalf of our senior producer, Aaron Sebeski. We wish you a great night. Hope you'll join us again tomorrow night, 6 o'clock Eastern, 3 o'clock Pacific time. Always remember to consult a qualified financial advisor, folks, before you make any investment decisions. Take it easy.